Hello and welcome to the Ecom Sales Tax Podcast. My name is Ryan Johnson and I've got Dan Peisner with me today. Dan, welcome back.
Thanks, Ryan. I'm happy to be here.
All right, so I've got another great question for you today. You know, we talk a lot about sales tax. We talk a lot about the Wayfair decision, the Supreme Court, and that left a huge wake of companies having to register in different states, give them Nexus in a lot of different places. But I don't know if we talk enough about income tax. You know, what income tax implications have you seen because of Wayfair?
Well, that's a great question, Ryan. And one of the biggest implications we've seen is just we've seen CPAs starting to ask more questions. Sales tax is a very large liability if you're not collecting it. And so a lot of companies have started paying close attention to sales tax. And a lot of companies have gone out and gotten registered in the wake of Wayfair. And what we've found is a lot of CPAs, when they've come around to do their income taxes now, are saying, no, wait a minute, if you're registered for sales tax, do I need to be looking at income tax in all these states? And as with everything in the world of taxes, the answer is usually, it depends. Just because you have sales tax nexus, especially under the Wayfair rules, does not necessarily mean that you have income tax nexus. Income tax is a little bit of a different world. It has never been, in most states, for the most part, have not followed the predecessor to Wayfair, the Quill ruling. They've been holding that was purely a sales tax ruling and that they could impose their income tax on any company that met certain thresholds, and the physical presence was not necessarily one of them. However, income tax has a very unique limitation called Public Law 86-272. That was the 272nd law passed in the 86th Congress, not necessarily in 1986. And it was a temporary law that came out in the wake of was Eastern Portland Cement ruling for the U.S. Supreme Court that said that they could impose an income tax just on a company that had no physical presence whatsoever in the state. So the Congress is outraged. They have a session and they come back with 86-272, which simply says that if you are selling only tangible personal property, if you are doing nothing more than soliciting in a state, so you can actually have employees or independent reps going into that state as long as they are only soliciting. If the orders are accepted from outside of that state and fulfilled from outside of that state, then that state cannot impose a net income tax on you. And because you're dealing with interstate commerce, Congress has the authority to do that, and that law was passed as a temporary law under the idea that a commission would get together, look at the relevant factors, and come out with recommendations for a more permanent law. Well, the commission did its work. The states didn't like one bit of it, and the temporary law persists to this day. So what that ultimately means is that a lot of our clients and a lot of taxpayers out there that may have sales reps in a state, and that gives them that sales tax nexus, or they may have economic nexus under the new Wayfair laws. If they're selling tangible personal property, they're not providing a service, and they meet the other requirements, then they actually do not have to file a net income tax. Now, that's going to be a comfort to a lot of companies. However, there are some gotchas in there. If you look at the Texas franchise tax, the Ohio commercial activities tax, if you look at the franchise tax for Missouri, North Carolina, all of those are not based on net income. And as a result, 86-272 does not protect you from them. Additionally, if some states like California that do have a full-fledged income tax have an $800 minimum tax in the case of California, and there's a few, and I believe New York and New Jersey may as well. But because a minimum tax is not calculated based on net income, those states typically hold that those taxes are still due. So you may owe some minimum tax in those states, but it can certainly be a better answer than owing tens of thousands or hundreds of thousands of dollars in net income in the state. So there's ultimately there's a little bit of analysis that needs to be done. Some states they call it factor presence, where they look at, do you have any, you have to have more than certain sales, property, or personnel or payroll in the state before you have Nexus. We just recommend being very careful with those thresholds, because a lot of times they will, we've seen some states say, put those 3 thresholds in, but then say that if they can get you on physical presence from having any employees in there, they'll get you on that too. So you want to read all of the relevant factors when doing a Nexus analysis, just to make sure you're not missing anything.
Excellent. One follow-up question. Do you see any ripples of change happening around income tax, or do you think it'll remain the same for a while yet?
Oh, we most certainly see ripples of change happening. Income tax has always been, some states have kind of held it to a physical presence standard. But what we're seeing now is, as I mentioned, Texas with their franchise tax, they recently went from physical presence to now they have an economic threshold, same as their sales tax. Hawaii has actually passed an economic threshold now. I believe they went with the same as their economic threshold for sales tax, $100,000 in gross receipts or 200 individual transactions. And I would not be surprised to see a few other states start to go that way. It doesn't make as much, you may not see all of them do it necessarily. As far as thresholds go, $100,000 in gross sales is a lot more in sales tax than it's going to be in income tax, just because of you're paying tax on margin and not on gross receipts. So it's some states are going to do the math and see that they're going to be doing more work for not as many dollars, and there's a good reason that they oftentimes will use different thresholds for the 2 taxes. But I would expect to see a few more start to lower their thresholds, at least in order to capture more dollars.
Excellent. Well, thank you, Dan, so much for the information, and I hope to see you on another one.
My pleasure. Anytime, Ryan.